Hello, this is Ken here from Smart Forex Education. In today's video, I would like to talk about the fourth part, so part 4 of the case study, the trading journal where I've been documenting all the trades that I've been entering on the Forex market, and I've been showing a screenshot as soon as I've entered the position, followed by a video where I've analyzed and showed comprehensive detailed material of where I entered the trade, how I managed the position, and where I sold out the position, regardless of whether it's a profit, loss, or break even. During this case study, I am being fully transparent. Now, I'm sure you're aware there's so much news in the Forex market about individuals that make huge amount of money, but they cannot back it up. So what I wanted to do is actually take you through a journey, take you through my journey as a professional trader, and show you the trials and tribulations that I go through on a regular basis. So, if you go back to one of my previous posts, you would see the screenshot of the trade I entered, and I'm just going to pull it up now. This was on the 16th of March 2012, where I entered the trade at 13063 on the euro dollar, and I had a stop at 12889. So you can clearly see here the red horizontal line, that's my stop. And the green dotted horizontal line you can see here, that's the entry of my position. So this was taken just literally about 5-10 minutes after I had entered the position. As you can clearly see, price is trading around my entry price. So fast forward a bit now, I wanted to just take you through the reason why I entered the trade. So first and foremost, if you don't have your charting platform open, I would definitely recommend that you pull up whatever chart you use and really just to follow me. Just follow me on this specific setup so you can have a better understanding of or the reasoning behind why I'm entering these trades. So what I looked at first was the euro dollar monthly chart. And we can clearly see the overall direction short term, let's say based from the 2008, it's currently making lower highs. We can clearly see that, yes? But we've generally seen an overall increase from 2001 when the market has generally been trading higher, but we're now trading in a tight lower high range bound market over the last 3 to 4 years. And basically what I did is I drew some Fibonacci levels. So I took a Fibonacci level from a significant low to a significant high. So if you don't know how to do that, on this platform that I use, just go to lines, add Fibonacci retracements freehand, and you can take from low to high. And then I took another significant retracement from another low to a high. So what I was basically looking for is some form of a snap theory where we can see a cluster in the price. So we identified and we looked at this. This was actually on the 15th, funny enough. On the 15th, in the evening, I do a mentoring program where I teach and train my students how to trade. So we had located a phenomenal setup and I put in a passive order. And what we looked at is we saw a cluster in the market just holding in and around the 12916. So if I zoom in slightly here, we had a 25% level from a smaller swing to swing high. And then we had the 40% retracement from a larger swing to a swing high. And we identified that there's a strong support base. So price had tested the support on, and this was, if I just zoom in here so I can show you to a smaller time frame, we'll go to a daily. price had tested a support on the, that was actually on the 14th. So it was on the 15th. So it was on the 15th where the price had tested just above the long-term fib retracement. And this provided a nice opportunity, not for a buy. So we didn't enter just straight on those lows. But what we did do is we had opportunity where there's a price finding support. Then we identified on the RSI. Now, we don't use RSI how a lot of retail traders use RSI. We use RSI looking for some form of divergence or smart money. So basically looking for where the smart money buyers are trying to enter the trade. So we identified a bullish divergence. We saw price holding at a previous, just off the monthly cluster retracement level, where it was a nice bounce. And then what I wanted to do is look for a precise entry. So I zoomed to a smaller time frame, and it was on a 30-minute chart. And I basically drew, and as you can see, my trend lines are still here from identifying, locating a certain trade. So my entry of the position I entered was just slightly below here. So we saw a slight breakout, but I entered the trade at about 13063. Okay, so we saw a price tested a support level and then broke through it, but I was still confident of this setup. So it wasn't until early this morning that I took advantage of the trade. Okay, so from the bounce, tested a 50% from a smaller retracement, and I was very confident that it held this level and we were going to see a strong move up. And my entry was based on that level, 13063 level, and I had a stop. The stop was based on the monthly retracement just below the 40% retracement at 12889. So we had a large stop, but it was related to our predefined risk management levels. Now it's so important to have good risk management levels. Okay, so we had a nice stop, and we were basing this on a longer term trade because we can clearly see, if you look on a daily time frame, yes, the market is moving to the downside. So it was a counter trend play on a smaller time frame, but we were looking at the bigger picture. Remember, it's very important to have a larger awareness of the market. Now, you might find some traders that will say, oh, why are you trading against the trend? Well, we have a unique system that we would only enter trades if it's based on a high probability setup. And the setup was in place, and we took advantage. We had a nice stop. Entry target was great. And then what we then did, we also set, prior to that, we had a target of, because it was a longer term play, our first target was just based on the 40% level, which is at 13143, and we sold out one lot of the trade. And what we've now done is we've taken our stop, which was at 12889, up, not just to break even, but we've trailed our stop to our first target level. Okay, so we're, number one, we've sold out one lot, but we're already in sufficient profit and locked in profit from our remaining lots that we have in the market. The next target we're looking at is the 1.3270. If it doesn't get there, doesn't matter. We've still banked nearly 100 pips on this trade. And this is how you trade. So you need to prepare first. Make sure you look at the larger time frame, because if you want to differentiate yourself from the overall crowd, look at the bigger picture. Have a better understanding and an awareness of what's going on in the market. Okay, so we're still in the trade, just to let you know. We have targets. We've sold out of one lot of our position. We've locked in the rest. Still in the trade. And we want to see how this market transpires. So I'll be in touch shortly with the developments and the next steps regarding this trade. If you have any questions, any comments, please feel free to let me know. Any assistance that you need, great. But if you had opportunity of entering this trade just after I posted the screenshot, then congratulations. A lot of my students did, and they're in phenomenal profits at the moment. So anyway, have a nice day, and I will speak to you very soon. Take care.